Hello, OptionStrat traders. Steve Ganz here with another trade concept and idea to take a look at. This is probably one of my favorite trades and a trade that I focus on with my students. Now, we normally trade in RUT or SPX. Now, those are large indexes that are not geared toward newer traders. There's a number of reasons that I like to trade in those, but again, you can see here this carries a much larger risk associated with it. This is a one-lot butterfly, and many times we'll trade in multiple lots. But I want people to learn this concept and understand this concept, but I want them to be able to do it with a much lower risk. If you're paper trading, it doesn't really make a difference, and again, I fully suggest paper trading, but you should also paper trade in a size that would be the actual size that you would trade once you start trading live. So I'm going to actually share this in an ETF called XLF. XLF is a financial ETF, and I'll show you in a second why I've chosen to use this particular ETF. So we're going to come back to this in a second, but let's just take a look at our chart here. So if we look at a chart of XLF, again, XLF is the financial markets, largely the banking space. So as we know, banks have suffered a little bit recently through some of the banking fears, and they've sold off quite a bit. And they now are looking to be trading in a range. I would say the low on this range, if the markets were to sell off again, barring any major bank failure or something like that, I can see where these would trade back down to around the 31 mark, the ETF might. And it could trade back up into the 33, 34 range, maybe even all the way up here to 36 or so if the banks fully recover. So let's just think about that a second. So I'm going to call 31 kind of a low water mark that is what I'm expecting. So based on that, I want to design a trade that doesn't have a great deal of risk in it in that range, $31 to whatever on the high side, okay? So that's where the broken wing butterfly is so valuable in my mind. So I can set up this particular trade. Our dashed line here is where the ETF is currently trading, which is right at 32.33, we can see up here. Our break even to the downside at expiration is right around the $31 mark. So in other words, that kind of encompasses the window that we're looking at. I'm okay if this thing sells down to 31 at expiration, I'll still be close to break even. So I'm going out a ways on this. This is 66 days out, the July 21st expiration. But look at the upside here. So the upside on this, if the banking ETF or this XLF rips to the upside, this trade will still be a winning trade. That's the benefit of a broken wing butterfly, and particularly a broken wing butterfly that I can put on when volatility is a little bit higher, as it currently is in the banking markets, because of the relative fear that exists there right now. Normally, the banking ETF does not have this higher level of volatility, but because we have higher volatility, I can get into this trade. And again, I have no risk to the upside. So if the market rips, no matter how high it rips, I'm at least going to come out of this with a $4 profit. Now, by the time I factor in my commissions, maybe it's a break even. But again, the key here is I have no risk to the upside in this trade. If the market were to totally tank, I do have $96 in downside risk. So I need to keep that in mind and need to understand that that is a risk that I will be taking. But I have a profit potential at $104. And again, let me be clear on most of the trading that I do. I am in no way, shape, or form shooting for this target. I do not carry most of my trades into expiration. So, but let's look at how this is going to move over time. So when we first enter this trade, we're going to be at break even. We'll actually be down $1 or $2 because of commissions, but we're essentially going to be at a break even point. We can see our dashed line here, which is about halfway through the time period on this trade. So if this trade just decays, and I can just march it forward here as well, if this trade just decays, we can see that our T0 line, this green line here, will raise up a little bit. And again, when that thing raises up to where, I moved implied volatility there. Let me reset that. When this raises up to a point where I'm looking at, maybe 10, 15% profit, something like that, right here on July 5th, I would be at about a 20% profit in this trade. That's when I look to take these things off. I mean, 10, 15, 20%. Just rinse, wash, repeat. I really like that concept and that idea. But you have to get the right entry in the trade first to be able to, set there and let this happen. So that's what I'm looking for. I'm looking to enter a trade like this. I'm looking to just let it slowly decay over time. And then I'll take it off when I hit a certain profit that I'm looking to achieve in this trade. And this is going to be some days out. I mean, this could be 30, 40, 50 days out. The way that I tend to trade, and I tend to teach my students to trade, it is quite frankly like watching paint dry a lot of times. It's not very active trading. If you get into the trade right, and again, we like to largely trade these butterfly sort of trades, it's just a matter of kind of letting them sit, and a little bit of that theta decay ticks into your account each day, to where we're trading and generating a few $100s a day or so, but it's in theta decay, and it's just very slow over time. Now, if you do get a big market move and our market drops significantly, no matter what you're trading, that will create issues for these, and we need to know how to adjust them, etc. When that situation occurs. But the butterfly is a very forgiving trade. So again, I would recommend that you put this on in paper and then just kind of watch how that decays over time. Select the time or the point that you would take this trade off when you have hit a specific profit target that you would be looking to generate on this. And note that even if we run outside this tent, now at expiration, if we run outside the tent, we haven't attained much profit there at all. However, a week or two or three, whatever, before expiration, we can still be way outside this tent and generate a decent profit on the trade. So again, that's one of the reasons that I really, really like these butterflies. They have a lot of slow-moving profit potential in them. And I just consider them one of the lower risk trades that a person can make. And of course, all trades contain risk. But the thing, again, I like about these is this relatively very flat T0 line, and the fact that a broken wing butterfly specifically, when you put it on properly, it carries no upside risk. So now all of a sudden, I really only have to worry about the market doing one thing. And that's not a pullback. If it pulls back a little bit, I'm okay with that. It's just a big pullback. In this case, it would take almost a 10% drop after this thing has already dropped 15, 20%. It would take an additional 10% drop for this to really start to bother me a little bit. So I feel like it's a good time to consider a trade like this, again, because we've already had a pretty big drop from 40 down to 32. What is it? That's almost a 20% drop. So the likelihood of it dropping another 10 to 20%, I personally feel is kind of low at this time. Again, which is what makes a trade like this that much better to put on at this particular point. So I'm going to go ahead and I'm going to save this trade. Again, as I always do, I will paste the link in the description below. I urge you all to come in, and if you come under build, you can come over here and you can specifically see, let's see here, I know that's in here, the broken wing butterfly. So we've got a Here we go, put broken wing butterfly. So there it is right there. So you can study up on this butterfly. I would urge you to compare this put broken wing butterfly to just a regular put butterfly and just kind of contrast and compare those two. Again, in certain conditions, I think this is a better trade, particularly after the market has already sold off a significant amount. And I have an opinion that the market is likely to not go much lower than it is now. But even if I have that opinion, you can see when you put this on in certain ways, it still gives me a lot of downside room. So if I am wrong in my assessment and the market does continue down a ways, I've built in a buffer here. So that's another really nice thing that I like about this trade. So that's it for now. I just wanted to share this trade. Again, I'll paste the link down below so that you can just copy this trade into your account and watch it play out over time. So thank you very much again for following along, and we'll get back to the Contrast and Compare series next Tuesday. That's it for now.